Okay, I chose to move around because I want this to be as engaging as possible, right? And I also know that it's pretty difficult to hold sessions like this after heavy lunch. I saw some people having poundo yam and all of that. I was like, kai. You don't know what you are joking with. You will be fighting the sleep. The sleep will be coming back. As you are fighting it, you will be coming back. Okay. So, taxes and levies, that's what we're going to be discussing for the next 1 hour, thereabouts. And quite frankly, the fact that when you hear of taxes or levies, what comes to your mind? Let's just talk freely. As a business owner, what comes to your mind? Government wants to hit your money for free without giving you value. Okay? Who else? What comes to your mind when you hear of taxes? Sorry? Government tithe. Okay, fantastic. I like the sound of that. Who else wants to try something on this table? What comes to your mind? Give to Caesar. Fantastic. I like that. This table. Government property, GP. I think it's only this table that hasn't said anything. So, what comes to your mind? Bills to pay to the government. Fantastic. So, we are all spot on, right? Taxes, in a saying, they say that other than death, right, the next certain item or event is the fact that there will be tax. So taxes are as certain as death. Everybody's going to die someday, right? And when I think about it, sometimes it gives a level of peace. Because everything will come to finality, right? At some point, everybody is going to go, whether you like it or not. Think of your grandmother, your grandfathers, your great-grannies, for some of us that had the opportunity of interacting with them. Where are they now? They are gone, right? So taxes are just as certain as that. So at some point, right, someone is going to come calling, and the conversation would become, how have you fared? It's not a matter of if. You know, when people say, if I come tomorrow, it's 10 p.m. or at 9 p.m. in the evening, right? That's exactly how it is. But I want to tell you something. The fact that you are here this afternoon and you registered to be a part of this clinic already shows that you have that consciousness, right, to keep things right. And I want you to just give it to yourself as you are seated here, that you made it to this point. So just jettison whatever your practices have been with respect to this subject matter, or whatever any of the speakers might have said in terms of legal framework when Chief was talking, in terms of business finance. You might not even rank at all in any of the scales, right? But I'm saying the fact that you are here emphasizes your desire to make things work. And I sincerely want to appreciate the convener of Lagos Business Fellowship for having such a art to put this together. And I tell you, some of the things is shared, they are experiential. You know, when you've gone through something yourself, it was sharing how FRS slammed them, right? And you feel other people, other Christian professionals running business, what can we do? This is an investment, right? To ensure they do not necessarily toe that lane anymore. For me, that's quite encouraging, you know, and that's why I said that if you are here, there's no need to fret or rank yourself low or think, oh, I'm far off, or I'm not even there. Why am I bothering myself? You know, so knowing that taxes are certain, the question then is, what are my obligations? Depending on the different forms of businesses, you know, that we have, the obligations vary. Please, I'm going to need this board at some point. Someone can just help me move it here. The obligations would vary depending on the form of business that you have incorporated. The starting point is to know, have that awareness of what your obligations are. Businesses don't pay liabilities sometimes because they owe them. I'll say this again. When an audit happens, investigation happens, review happens, whatever happens, businesses don't eventually pay because they, in fact, owe those liabilities. Sometimes you pay just because you do not have sufficient proof to justify that you do not owe the liability. Let me say it again. Because if that is the only thing, I know that will not be the only thing, but if that's the only thing you take away, I will be fulfilled. Businesses do not necessarily pay liabilities when an audit happens, when reviews happens, because they owe those liabilities. You know, when someone comes to you and says, you killed somebody, you can cross your mind and say, no, I didn't kill now. You know that, in fact, I didn't owe this liability. This business did not owe this liability. But they pay because of their inability to justify and prove that you do not owe the liability. Now, there was something that Mr. Ojo mentioned when he was talking. And for me, at this stage, it is the bedrock. Keeping records. Record keeping is at the core of compliance. And because it shouldn't cost much. You know, you're saying that maybe you have an accountant, someone who can just... I know people that just got chartered, right? That have not even joined any company or that just finished school. They can take 20K, 30K per month from you to put up a simple P&L together. They run it for like 10, 20 businesses. You are not even going to see them. You are just going to be talking on WhatsApp, you know, and they send your account to you. You can have something at the end of the month that when someone says, what have you been doing? You can show that this is it with proofs, you know, so that when, I did not say if, when that day comes, you'll be able to go to the shelf, right, and bring those things out. It's a culture that business owners at whatever level or capacity must inculcate. It should not cost you a arm and a leg. If you don't have a laptop, if you buy 2D or what do they call the exercise book, you can rule a line like this. I'm saying it can be that rough, tattered, right, and pedantic, but it should not be non-existing. That's what I'm saying. Because in whatever form that you have kept it, it can be transposed. It can be rewritten, right? It can be moved. It can be transcribed to another version. But when you don't keep it, and the passage of time has happened, you have lost the opportunity to then go back in time and keep it. I was checking some books in the house. I moved the apartment. So I was checking some books and I saw that I saw a particular book. I once had a poultry. And the crates of eggs that the chicken laid several years ago, daily, I opened the book and I was seeing it. So I'm saying this accounting thing, it has to be resolute in you that you are not doing a business that records are completely missing or non-existing. It's a no-no. And as we go on, I will tell you why it's a disservice to your work. It's a disservice to your time and investment. You know, businesses are like children, right? They take time to nurture. So you are giving your time, your life, you are engaging people. And you are going to be doing all of that without keeping a record of it. Oh no, it should not be. So record keeping is by far one of the most important things that we need to know. It helps you to also know what your obligations are. Are we together? So what are the overview, of taxation in Nigeria? Generally, you have obligation to, depending on the form of business, is driven largely by the form of the business you have incorporated. If you have incorporated, if your business is a sole proprietorship business, as Chief explained, you and your business, you are one and the same. I be the business be me. There is nothing bad in it. I wrote that down when he said it. He said it is legal, completely legal to run a sole proprietorship business. The only challenge is everything will be around you, right? Everything will be around you. So if anything happens to the owner of the business, by chance, for whatever reason, right? The business stops right there. I was interviewing someone 2 weeks ago, and I said, oh, you work with this person for so period. So what happened? Oh, he said the owner of the business passed. And you know what that means? It doesn't matter how much time you've spent. That's close of shop, right? That's the demerit. That's a fundamental demerit. But if you run that kind of business, your obligation is going to be limited to mostly to states' inland revenue service of the states where you reside as the business owner. Are we together? So, again, the issue of value-added tax may then make you have extended obligation to Federal Inland Revenue Service. But as you will see as we go on, you might not have that obligation if you did not meet certain threshold. So if you are a small business that your revenue is less than 25 million, right? The expectation of the government is that you are not even supposed to put VAT on your invoice. Let me say that again. If you are a small business, your revenue, in another parlance, they will call it income. In another parlance, they will call it inflow. In another way, they will call it receipts. Don't mind accountants. They can be very confusing people. They are saying the same thing, right? Everything is just pointing to the money you receive, right? As long as that money in a year doesn't total 25 million naira, you do not, as Nigeria is currently, have the obligation to put value-added tax on your invoice. Now, I've seen many SMEs run foul of this. You know why? The invoice is 2 million. The VAT is 150,000 naira. Because they know they are not going to pay the VAT anyways, they issue the VAT on the invoice, give the customer. The customer then pays 2.150 to them. And they feel that way they have increased their profit in a way that is ingenious. There's a Yoruba proverb. If I say it now, it's the interpreter that we'll be looking for. You couldn't juggle there, you couldn't ready. You couldn't monk pani. So how do I interpret that now? Ikun is squirrel. So the squirrel was eating banana and was twisting, was enjoying it, not knowing that it's a trap, right? That is the very trap that will still orchestrate the death of the squirrel. So because what such an SME has done is that you have legitimized your liability. The government, in its own knowledge, felt it would be burdensome for you as an SME to be encumbered with the responsibility of filing VAT on a monthly basis. But you, because of long throat, on the contrary, you thought, how do I increase this my margin? Let me add additional 7.5 to it. After all, everybody is collecting it. I also collect. As you collect, you have collected problem. May we not collect problem? Oh? So my point is that you know your obligation by the nature of business or the legal structure of the business you have incorporated. So if I'm a sole proprietor and FRS is now coming to me, which happens, I have a lot of friends, colleagues, family members, they will send you a letter and say, oh, these people are coming to disturb me. Once you just look at it, what's your form of business? You don't have business with these people now. You just give them one template letter, they submit it like this, they fire. Once you fire the letter, they will not come again. Because guess what? The Nigerian system is also a very difficult system to run business. The corruption is at every level. You are supposed to walk into a tax office and you get clarifications for free. But I tell you, from my experience, the tax administrators are the ones that have even orchestrated the downfall of many businesses. So you walk in there at your own peril. They give you instruction. In fact, you as you are having discussion with them, they are suspecting you, you are suspecting them. Both parties are suspecting one another. They are suspecting it because as you are saying, this is my revenue now. There was no business last year. You say, And as he's telling you, you will have to bring your bank statement. You know, we can say, which bank statement? In your mind, you know that you will not give. So they are aware of the kind of business environment that we run. But you see, whether you like it or not, pray from today to tomorrow. As it stands now, that is the business environment that we operate in. We are hoping that it will change. We are hoping that as more and more people like us begin to emanate and spread, we will have the capacity to influence policies that will then make things become easier. But until that time, we then need to know how we need to cope and survive. And that's part of why we are here. So we need to know what our obligations are. The overview is you have Federal Inland Revenue Service, generally administering taxes that relate to limited liability companies, right? You have the state tax authorities that are also charged with the responsibility for sole proprietors, partnerships, those ones that are within their specific states, right? Then, of course, you also have the JTB. The JTB is supposed to be like a repository where, for instance, if you are doing an audit and someone says, oh, I don't live in Lagos, this employee does not live in Lagos, he lives in Kano, right? The tax authority in Lagos should not have to go to Kano to confirm the legitimacy of the information that the company has provided. There should be like a body that would have that central information. That's part of what the JTB should do. But from a compliance standpoint, I think what we need to do, is the fact that we need to know what our obligations are. Now, the question is, what are the major taxes that affect our state of business? This is a business clinic for SMEs. So most of the conversations are SME focused. So pardon us if your business is already bigger than being able to fit into SME. Maybe you have another one, the purpose for which you became eligible into this clinic. So the major taxes that would affect us, we have the CIT. CIT would be company's income tax, right? Will be applicable to entities that are incorporated in such a way that they are a different legal entity from the owners. We've gone through the legal forms of businesses that we have, the one that Chief handled in the morning, right? So if you have a limited liability company, right, then we can talk about company's income tax. So that way, the company is like a juristic person, right? It's like an entity on its own. So there's a tax that is required. Now, if you have that kind of legal structure and you're an SME, the law as it stands now is that, again, small business. When people hear taxes, people ordinarily just think of what they are going to pay, right? But in the case of this company's income tax, for instance, again, if you don't have revenue that is up to 25 million, your tax rate is 0%. And that's why when people run away from compliance, right? It might not be that you actually even have a lot to pay. So 0%. So if your profit is, say, 2 million, your liability, your revenue, remember we're talking about revenue as the threshold. Your revenue is 25 million, your revenue is 24 million, for instance. Your profit then is 2 million. Whatever you multiply by 0 is 0, right? You have no tax to pay. The law as it stands now. You know there is something going on now with the tax, there's a fiscal committee, right, that is working on the tax bills. We'll talk about them briefly as it might pertain to SME. But as it stands now, you don't even have CIT to pay because the rate is 0%. Now, the fact that you do not have CIT to pay does not mean you do not have obligation to file. There are two different things. I'll take that again. People run away from compliance altogether. Once people hear taxes, like my sister said, government has come again. Everybody feels the same way because, let me tell you, tax is more like a social contract, right? In countries where things work for the most part, if you ask your colleagues, your friends, family members that are in the UK especially, they tell you how terrible the tax rate is, right? But the pay is not negotiable. You know why? 2 days ago, I was telling Ola, I left office at 5:30. My office to my house, at Ikoyi, my office to my house is 17 minutes, ordinarily. I didn't get home until 3 a.m. I've never seen that kind of thing in my life. 3 a.m. That terrible traffic that all of us read and saw on social media. Some people even say, yeah, me, I was boiling inside the traffic. 10 hours. Now, there's no train, nothing, right? So, is either your vehicle or your feet. Do you understand? There's no alternative. When I was coming to this place in the morning, there was no other way. In fact, since that Wednesday morning or Thursday morning, I didn't leave I was telling Ola that when I was going this morning, I was like, God, I commit my life into your hand. I was just saying, I hope I won't meet this terrible traffic again. Because for the most part, people struggle to see some of those dividends. They are there, and that's why I'm going to mention, I will talk about your point. They are there. People will say, oh, the country is not working. It's a failed state. No. It's people that don't understand governance. In a failed state, we can't all sit like this. We can't. Have you ever heard of police going on strike? Can you try it? Can they try it? It can't work. Because you can't even leave your house from point A to point B. So they still use some of those, the taxes are the things the government will use to do that. But the more of it is not what we see. So because we don't see it at that level, at that heightened level of infrastructural development, it's difficult for every one of us to think that government is a silent stakeholder. That's what I call them. Ola said they can have as much as 33%. He said 30%, but by the time I had TET with it, you're already going the range of almost 33%. If someone has 33% of your business, stake of your business, the person should be respected, right? The person should be respected. He should be respected. Someone said something. He said, if you are a poor man, don't fight with a rich man. In Nigeria. Because I know that there are places in Nigeria where they will blindfold you to go there. You won't know where you are by the time. And a rich man can orchestrate that to happen by Nigerian standard, right? So if you talk about government, you can't win the war. So, and that is the owner of the tax that we are talking about. So it's a matter to be taken seriously. That is just the point I'm trying to emphasize by what I've said. So I've talked about CIT. The CIT rate for SME that have revenue of 25 million down is 0%. So there is nothing to worry about. The only requirement would be disclosure, right? Are we together? Then another major tax that affects the SME space is VAT. Now you need to know how this works. VAT is not your tax. It's not your tax. It's consumption tax, right? You're just a pass-through. And I'll cite a very simple analogy. If your business is buying, you are selling the furniture. At the time you are buying the furniture, they charge you VAT. I'm just saying, hypothetically. They charge you VAT of 7.5. So you paid 107.5 naira to buy the furniture. When you are selling the furniture, let's say you are selling for 200 naira, right? Ideally, you are also supposed to charge VAT of the same 7.5 on the 200 naira, right? Which is going to be 15 naira, correct? So what you should be paying to the government is that you take that 15 naira like this, right? And then you remove the 7.5. Remember that you suffered a 7.5 at the point when you bought, right? So you bought for 100, you suffered 7.5. You are selling from 200, you are selling at 200, then you are also going to charge 15, right? So the net is going to be that you back out your 15, right? From the 15, you back out your 7.5, right? And then you remit this 7.5 to the government. So this is the way it's supposed to work. You are just supposed to be a pass-through entity. It's not your tax. All of these 7.5, you bought this one here because you were buying from a supplier, right? Then you were charging this one here because you are charging the consumer, right? So it is the consumer that has paid you the 7.5 that you incurred at the point you were buying your own raw material, right? Or your inventory to sell. And it is a consumer, the final consumer, that is also paying this 15 to you. Remember, this person is going to pay you 215, right? And you have paid what? 107. So the way it works, I'm just trying to explain very briefly. Input-output mechanism, that's what they call this thing in VAT. The way it works is that it's not supposed to be your tax. So the fact that it's not your tax, the punishment is severe. You know, when he talked about that 5,000 the other time, the way you calculated it, you probably thought, let me calculate it for you. So you have January, February, March. Let's say this was 2015. 2015. Then we are now in 2025. Right? So for January, the penalty for not filing the returns of January, the returns relating to January, is the 5,000. Right? Now, we now ask, did you file it when it was due in February? That January returns. Did you file it when it was due in February? No. You didn't file it, right? 5K, right? Did you file it in March? No. That January, that's the one we are still considering. Did you file it in February 2015? No. Did you file it in March 2015? No. 5K. Did you file it in April 2015? No. 5K. Did you file it in May 2015? No. 5K. Did you file it in June 2015? To December 2015. Did you file it in December 2015? No. 2016. This January 2015 is what we are still computing. No. Did you file it in January 2016? No. We go like that. Did you file it in January 2017? No. We go like that. Did you file it in 2018? No. 19, 20, 21, 22, 23, 24, 25. We are now in 25 April. As you didn't file in March 2015, no. Then we go like that. Then we now add penalty and interest. That is the exposure that most businesses are sitting on. You can't survive it. Your business can't survive it. It's designed to crumble you. It's punitive. It's suicidal. I'm telling you. Because it's not your money. Remember what I explained here. It's never your money. You collected the 15 naira from a customer. You bought 7.5. You are an agent. Just pay me my 7.5 as the government. And you sat on it.
So this is what we are talking about. When you talk about penalties and interest, just envision this. It will crumble you. And that's why it will crumble the business. And that's why the tax administrators then say, you know, it then opens opportunity for sharp practices. They then say, hey, how can we now help you? We help you? You don't want to be helped? Okay, go and pay the... So my point is that the costs of non-compliance can be very high. Extremely high. Are we together? VAT. Personal income tax, this will worry you when you now begin to have employees. When your business can then afford, as you are here, someone is doing some running around on your behalf. Someone is in the store. Someone is attending to customers. And then Chief spoke about how you have to give contract letters. We overlook those things. I have driver, I type out contract letters for them. You sign, you bring guarantor. Your salary is stated there. My obligations are clear. Your obligations are clear. Basic. We overlook those things. Oh, we just have somebody, oh, it's just somebody that referred him to me. No. After he's worked for a month, you've looked at the person, you see that the person wants to continue working, issue a contract letter, it costs you nothing. So when you do that, when you now begin to have employees, when your business begins to have employees and the business is beginning to pay other people, there are expectations. The government also expects that you, the employer, the business, calculates and deducts payee from that income, which will be that person's income tax. You know, we discussed CIT the other time for business, companies' income tax, right? So the emphasis is really on income tax, right? So the income tax for the individual that is earning salary is payee. It's based on the pay as you earn regulation, right? That obligation is also on the business owner. So the business owner will compute the payee, calculate the payee, and remit to the State Internal Revenue Service where that business is functional. Are we together? Okay. Then another very common tax. It's not a separate type of tax in itself. It's an offshoot of the income tax, whether for company or individual, is withholding tax. But it's very common. You know why it's common? Because it's transaction-based. It's a transaction tax. Sticking to this example that we made in the issue of selling and buying shares, by the time you are paying this supplier, the burden to comply is on the party that is paying, the payer. So you are paying a supplier, this is 105. By the time withholding tax obligation kicks in, there's a percentage of this, which used to be 5%, which has now been reduced to 2% that you deduct. So you pay this person 98 naira on this, from this 100 naira, and remit 2 naira to the government. You see how government is popping up everywhere. I call them silent stakeholder. So this 2 naira is then paid to the government. So in like manner, you know, this your customer is also going to pay you under a contractual obligation. There are instances where these rules of withholding tax do not apply, where you are talking about over-the-counter transaction. I just go to a malam across my street and I buy stuff. Do you get? There's no contract. There was no supply. Do you get? But from experience, contracts have also been deemed, especially as the business is beginning to grow. You know, there was something that Chief said when he said you have to put compliance structure in place, right? As the business continues to scale, you have to start saying, okay, what do we do? Because there are instances where frequency of the transaction, contract had been deemed. Are you getting my point? You always buy stuff from the malam. There was no contract. But every time you send someone from your office or your business to buy stuff, maybe it's computer, whatever, he buys it from there every time. So mere repetitiveness of the transaction and the frequency of it, a contract may be deemed. It had happened many times where contract will be deemed. So then look at, oh, we bought water to the tune of 2 million naira. You won't know how much those things have got. Again, it circles back to records, right? Because records will show you. With records, you can see, oh, this is what it has cost us as office float, right? This is what we have spent as admin. He was mentioning travel expense the other time because there should be a trend. So when you have situations where you are just buying in the ordinary course of business, or you are just buying tax credit for you or for the company if it was CIT, right? And you can then use that credit to offset your own tax obligation. So what do I mean? Accumulation of these 2 naira. Let's say you then total say 30 naira at the end of the year, right? Then when you compute your tax liability for the year, the tax liability is 50 naira based on your income and the application of the law. What it means is that you back up this 30 naira credit from the 50 naira and you pay only 20 naira to the government as your tax liability. Does that make sense? Mm-hmm. So most people refer to this withholding tax as advance payment of like rent. When you are renting a space, for instance, there is withholding tax applicable on rent. But what you find most times is, you want to get the space, or If you like the space, pay me in full, If you don't like the space, you do what? That wants to rent the space, come, right? But it does not override that obligation from the business. Are we together? So moving on very quickly, I've spoken about tax reforms. These are just things you need to know. That Nigeria we've been taking cosmetic approach to amending the law through the Finance Act in recent times, maybe since 2019, 2020. So they've continued to issue the Finance Act 2020, Finance Act 2020. They will change some laws. And now they are looking at everything holistically. And they are seeking to introduce. There are about 4 different bills, right? Some of them have specific provisions for SME. Some of them are not too different from what we already have. For instance, when you go to personal income tax, the suggestion is that anyone who earns 800K, and below would not have to pay taxes, right? It used to be 300,000, and then you pay minimum tax of 1%. But by the time the new graduated scale kicks in, those that are earning more would pay about up to their band. It's a band, it's a graduated band, right? The band will get to up to 24%. But those that earn, so the likes of Ola and Co can start getting afraid. But those that earn 800K per annum downward, the tax rate, would become 0. Of course, similar to what you have under the CIT, arrangement. But I'm not going to bore you with the details of all of those things. So very quickly, what are your compliance and filing requirements? I'd mentioned that the fact that you do not have, you have 0 tax obligation, 0% for businesses that are SMEs that have 25 million below and that are incorporated as limited liability company at the very least, right, does not mean you don't have filing obligation. So you still have to file tax returns to show that you have complied. There is penalty for not filing. There is penalty for non-paying. This one that we went through now for VAT is for not filing. It's not for not paying, no. So if you are a small business owner and you are thinking big, you need to know that it's a journey. It's not, and that is why some of the burdens have been dropped. I told you about the VAT, for instance. If you are still adding VAT on your invoice, please desist from doing so. The money will just hook your neck. Sorry? They won't pay. They pay, right? They pay, exactly. It's because they will pay. Let me tell you why they will pay. When the government says don't charge it, the government is not that magnanimous. So it does not mean the VAT on that transaction has fizzled out. Let me show you. It does not mean the VAT on the transaction. You know, it will be surprising if the VAT on the transaction disappears just because it's an SME that is conducting it. No. What the government says is that there's a section in the VAT at 14.4. The person, the other party that is dealing with you, the big boy that is dealing with you, that is freely paying you that money, now puts an obligation on that party to account, self-accounting, to account for VAT on that transaction. Do you understand my point? Now, when he fails, when you put VAT on your invoice, you take that burden away from him and place that burden on yourself as far as that transaction is concerned. When you don't, and he will pay you now because it's better for him to pay you. Because again, this provision is a silent provision. Companies are used to accounting for VAT on their revenue. You know that this 200 constitute revenue to you, as it will constitute, this 100 will constitute revenue to your supplier, right? Everybody is used to this. But you see this is a silent provision. When FRS does audit now, this is a cash cow. Because most big corporations will run foul of this. Because they're going to get a lot of invoices where the SMEs didn't have VAT, whether by sheer lack of knowledge or neglect or whatever. And the FRS will rain hard on them, where this is a vatable transaction. So the issue of VAT is about the nature of the transaction. What kind of transaction is it? Is the transaction vatable? Is the transaction a transaction on which VAT exists by law? There are some transactions that are not vatable. For instance, sale of food, right? Basic food items. The law is clear. There was a time some bottled water companies took FRS to court, about 7 of them, sometimes in 2015. You know, FRS argument was that value has been added to this water that has been bottled. You know, it's value added, right? So it was an interesting case that, how dare you say you won't charge VAT? You know, then the argument of the companies was that, were you expecting people to drink water from the stream? If you were expecting people to drink water from it so that water will retain its basic element, then you are on your own. So, of course, they won the case, the companies won the case, and it's not expected that you find VAT on water. So I'm saying that there are some items, there are some transactions that VAT does not apply on. But when you have questions, you will ask questions. Just write it down, please. So when you have transactions that are vatable, you can't escape, because it is the basis that they will be using to engage you, to say the nature of this transaction is a vatable transaction. Do you understand? So it doesn't matter when the transaction was carried out. There's a case I did. It was in 2017. The company is a South African company. By the time they looked at it, it was a silent provision like this too. The tax liability was $380,000. They didn't know, and they had to account for it. They've done business in Nigeria, it has gone. They had to account for it, and they paid the money. So my point is, these things are not going anywhere. So compliance obligation, I've spoken about registration with the FRS and tax authorities. People, TIN, tax identification number. This is very important. Yes, TIN. Prior to now, when you just incorporate, maybe people that register their businesses between maybe 2015 to sometimes in 2023, thereabout, as you are incorporating with the CAC will issue you a TIN alongside that incorporation document. That TIN will not be active. You need to validate it with the tax authorities. Some people have that as it stands. There are some businesses that have that. So you already have TIN, but the TIN is not active, right? All you need to do is to validate the TIN by engaging the tax authorities. But where you do not have TIN would be for incorporated companies, sole proprietorship, because of VAT issue. Remember I said that for sole proprietorship, the extended obligation you will have to the FRS will be because of VAT, if and when you qualify to start charging VAT. Are we together? Ordinarily, your EDIC will have just been your own payer ID, as most states usually call it. So if you are a sole proprietorship, you are going to have a payer ID. Remember, you are one and the same as your business, right? So anytime business earns income, is like you are the ones that have earned income. Anytime the business has a cost, it's like you are the one that has had a cost. So your business, you have a payer ID. And when people deduct from you, they remit into that your payer ID account for individual. Are we together? So it is extremely important that we have TIN. Now, banks will not even open bank account for you as a business if your business does not have TIN. Are we together? That's the level of, so the news is closing somehow. We've not gotten to that sophisticated level that we should be as a country. It's a reflection of where we are generally, as a country, but it is what it is. Then again, what are the, annual compliance tax returns? I've mentioned that. So very briefly, what are the incentives that you need to know about? I think I mentioned that the tax rate is currently 0%. You also have the credits, where withholding tax has been deducted. Some of you, people have deducted from your businesses, but you have never, and they've remitted, but you've never had the time to dig out your records or engage the tax authority to know what credits you even have. Do you understand? Those credits are actually cash. Are you getting my point? Some people, they've deducted from you, but they've not remitted. You've also not engaged them, to say, hey, you deducted from this invoice. Remember the 200 naira, 100 naira analogy, the 2 naira, but you've not remitted. It is at the point where you engage some companies that they are going to remit. The other thing we talk about very quickly here for SMEs, capital, the use of capital investment. So, especially for those people that have, for instance, you are running your business, right? And you have a car of your own, right? And you do not have any costs from that car that you are pushing to the business. You are doing the wrong thing now. Because if a customer says, can you show up? You show up with the car, right? If the customer says, there's a meeting somewhere, you enter the car and you go. But you have kept the management of the car your personal affair, because you also go to Owambe with the car on Saturday and you go to church or mosque, on Sunday. It doesn't matter. There's a part of it. There's a part of that burden. Because in actual fact, there is a part of the car that is going to the business. Do you understand my point? Sometimes a lot of people don't value that part. They just look at it and say, no, it's my car now. Then when you want to replace the car, you are still the only one doing katikiti, katakata, running to say, I have to buy a car. That's why you have businesses. Because in actual fact, your usage of the car would have been reduced, but for business necessities, right? Your need for your own personal usage for the car would have been minimal, if not for the business. So you also need to look at that with respect to capital investment. So finally, what are the strategies for keeping the strategies for keeping effective tax management. I look at it in these 3 ways. There are 3 ways for whatever company, SME, any company, there are 3 major aspects of tax that is instructive. The first part is the compliance part. The second part is the strategic. The third part is the external review or audit, right? Or audit. So compliance is saying the law says I should do X, I've done X. That's where most people camp around, right? The next part is the strategic. So this is in compliance with the law. The law says I should deduct, I've deducted, I have employee, I've paid their payee, I've paid pension, I've done all that the law requires of me. If I have not, I need to know by what extent have I not been able to keep up with this stuff. Now there's a strategic part. There's a part where nobody is chasing you. You're not chasing anybody. You're just saying, based on where I am now, what do I need to be thinking of? Do you understand? For this business, tax-wise. What are the potential issues? What are the things that may come up? What kind of affiliations should I be making? Should I start thinking of free trade zone? Whatever it is, whatever industry-specific incentive, should my next move of business be this line because there is a tax credit available for this line and all that? That is this angle. Now, this is then the review part. That's the experience that Ola was sharing. When the FRS comes, when the OGIRS comes, when LRS comes. I keep saying when, because with taxes, it's not about if, it is when. You might be doing business for 10 years and they've not come to you. They've not come to you because you have not yet gotten to the point where they feel you will work their time. The day you make, yes, because they're also watching you. They are watching your transactions. They're seeing your bank statement now. When they are doing an audit and they ask you for a bank statement, they're just asking you for asking sake. In fact, they're asking you to test your integrity, whether you will release, because if you do an audit, you now didn't give, they would not say, what about this 005001 bank statement from First Bank? They say, you have it. We know, we are just waiting for you to. Because they get reports, right? They get reports from the bank, you know, and they can reach whatever it is that they need to reach, you know, from you. Again, we are not at the point where we want to be, but we are moving somewhere as a country. So on a final note, what are the strategies for effective tax management? The number one thing I have here is keeping accurate records. Facts don't lie. Facts don't lie. That book that I told you is over how many years ago? Maybe almost 20. I'm telling you that Yamino bought 10 crates of egg. Now facts. It's there. It's there. You can't argue with it. So if you are, as an SME, thinking to grow, thinking to scale, positioning yourself and looking out for those opportunities where someone will say, what are you even doing? What do you have? It was Ola that was talking the other time and he said that it's just one shot. That your one shot would come. But when it comes, what is it going to meet on the ground, really? Is it going to meet a record, a business without record? The year is still fresh. You can still choose to start from 2025. Start from where you are. Take the first quarter and say, what has happened this quarter? I really need to put things down. Whether they are encouraging or not, it doesn't matter. In fact, the fact that you are writing them down is what will spur you into the next line of action. I tell you. Because when you look at it, you say revenue is going down. You know, if money is just hitting money in your account, you know, in your head, you just be thinking, okay, I may not, okay, business is not, but this 5 million is still there, this 3 million came in. When you write it down and you see it, January, X, February, Y, and you see March, you tell yourself the next thing that needs to happen. I think my time is up, and I would like to stop here so that we can have time for other things. Thank you.